ratio.
So yes, Rajeshwari, I should get time for that, na? What do you mean by like with that? I will definitely. I told you I'll explain. But for me, I need some separate time for that.
Yes, sir, I understand, sir.
Yeah, no problem. You can share your questions. No issues. Please share it. But let
Yes,
me
e-
just get the time and we will go. We will go definitely for session. Don't worry.
yes, sir. Even the
See,
cash flows also.
first of
Right.
all, join very late. At least we should take 2 months or 3 months with revision. But okay, we will try our level best to finish and start the revision. Okay.
Okay, sir.
So let us see the I already told you about the settlement value. The undiscounted amounts of cash or cash equivalents expected to be paid to satisfy the liabilities in the normal course of business. Undiscounted settlement value is nothing but I was telling you something now. I need to pay you 10 lakhs. You gave me a 1 month time, and I approached you after 10 days. I said I'll make the payment to you within 10 days. What discount you're giving? So you said I'll give you 10% discount. So I removed 1 lakh and I paid you 9 lakhs. So this is settlement value or not?
Yes,
Come on.
sir.
Yeah. Did I discount anything here? I did not discount. I did not find out the present value of 10 lakhs today. Nothing I did. I just discounted what? Now don't think undiscounted amount means what? Here discounted or undiscounting is present related to present value. Here I'm not finding any present value. This is my present obligation towards you. I need to make the payment. I'm asking you discount. If I make early payments or settle early this payment, what are you going to give me? What kind of benefit you're going to give me? You said I'm going to give you a benefit of 1 lakh. So my settlement value is how much? I settled my debts for how
9
much?
lakhs.
How
9
much?
lakhs.
That's it. I settled my debt for 9 lakhs. And present value, you already know the present value of future cash flows. So this is also the way to measure the value of the assets. Okay, when you don't get the market value easily, so we have already discussed about the entity specific value, am I right?
Yes, sir.
So entity specific value is nothing but present value of future cash flows. Okay, so that is entity specific value when you don't get a market value easily for a asset or fair market value doesn't exist. So this is what here historical cost example. A machine was purchased on 1st Jan for $3 million. That was its original cost. It has a useful life of 10 years, and under the historical cost convention, it will be carried at. When you showed historical cost, the carrying amount is what? Original cost of the asset minus accumulated depreciation.
Depreciation.
Correct or wrong?
Yes, sir.
So 3 million is the asset value. If you take that, divide 3 million by 10, so you get 0.3 million per year, and then 2 years from 2008 till 2009 December. So 8 first year, 9 second year. 2 years depreciation you are removing. This is what your carrying value is. This is the way you show your asset in your books when you measure your assets at historical cost. Okay.
What I done?
So carrying amount will be original cost minus accumulated depreciation when you show at historical cost. Current cost is nothing but today what the asset would be available if you buy that asset. So that is what you are ready to show the asset at. Okay, that will be nothing but that will be we can say it is nothing but almost the fair value. What is that? Almost the hello.
Fair value.
Fair value, yes. The current cost is nothing but today. If I buy that or if I sell that, what am I going to get?
Yes, sir.
Net realizable value already explained you. The asset value minus the cost of whatever the cost you are incurring to sell it. So cost like we can say cost of disposal or any kind of cost.
Okay.
Replacement cost of the machine will be the cost of a new model less 2 years depreciation. So cost of the new model less depreciation. The cost of new machine may be now this much. They are saying that replacement cost is nothing but cost of a new model. If you want to buy a new model, na, you are replacing your old model with what?
New model.
So for that new model, so replacement cost of a machine will be the cost of a new model less 2 years depreciation. The cost of new machine will be 3.5. Assuming a 10-year life, the replacement cost will therefore be 2.8 million. So what is this? What is this happening?
The cost of new machine.
Yes?
Now it is 3.5 million.
Yes.
The replacement cost is 2.8 million.
So 3.5 divided by 10, if you do 0.35, you'll get
Yes, sir.
0.35 into
Yes.
2 is how much?
So 0.7.
0.70. If you deduct from this, how much?
20.
So you took a machine right now. So replacement cost of machine will be the cost of new model. So new model is available at some price. You remove 2 years depreciation. Okay. So the cost of new machine or new model is how much? How much?
22.8 million.
No, 3.5 actually. You remove 2 years depreciation, it is how much?
2.8 million.
That's it. So that is the price you'll pay for replacing your asset. And present value of a machine. So this is suppose if a machine, so how will you find out this one? Suppose you are taking a machine, okay? You will be using the machine for production purpose. Hello?
Yes, sir.
Yes, sir.
That will generate some cash flows
Yes,
Yes,
sir.
for some 8 years. And the cash flows are what is the cash flow given here? 5 lakh. Can I say this is the fixed cash flow? Every year
Yes.
series of payments, fixed series of payments.
Yes, sir.
This is a similar payment every year. So
Yes.
what I can do, and the cost of capital is 10%. Cost of capital is nothing but when you buy a asset and do the production, you sell the goods and you expect some returns. Correct or wrong?
Yes. Yes, sir.
So these returns are suppose 10%. So the cost of capital is nothing but, see, cost of capital is equal to required rate of return. So for investor, this 10% is the return. For company, this is the
Cost.
cost. I think you have an idea about this concept. Come on, tell me.
While
Acha,
doing
you bought this machinery, na? For that
Yes.
you took a loan and you need to pay 10% interest for that, correct?
okay,
Yes.
sir.
So that much minimum you want to earn, na?
Yes, sir.
That's what is the required rate of return, minimum return. So
Okay.
now you should find out the annuity factor of this. Why I am saying annuity factor? Why annuity factor?
To ascertain the present value.
Yeah, so you know the time value of money concept now. So instead of discounting every year, it is better if you take, if you find out the annuity factor.
Yes, sir.
To because this is a annuity. That means every year you are getting a similar payment. So the formula would be P into 1 minus 1 plus R whole power minus n divided by R. So 5 lakhs into 1 minus 1 plus 0.10 whole power, how many years? Minus 8 divided by 0.10. So if you want, you can find out this way, this in this way, 5 lakhs into 1 minus 1 by 1.10 whole power 8 divided by 0.10. When you find out this complete thing, you will get 5.335. This multiplied with this, it will be this much today. That means 8 into 5 lakhs is how much? 40 lakhs. Correct or wrong?
Yes, sir.
This is the total value. For that 40 lakhs, the present value today is
26 lakh 67.
26 lakhs 67,500. Okay.
So this formula is for what, sir?
This is present value of annuity formula. To find out the annuity value, this is the formula we use.
Okay, sir.
But what he has done is, if you this P is nothing but this 5 lakhs. You can find out this bracket thing you can use and you can find out this factor.
Okay, sir.
And you know, like when you prepare the statements, you have to comply with IFRS. That is what they have said. So almost we are done with the chapter number 1. Today what we can do, this is done. Today evening we can finish this part. Groups may consolidated statement of financial position, and that will be done. So this 3 would be done. Tomorrow I will finish regulatory framework. This is, we have already discussed the 3 chapters. This I am sending the video today. So
Sir,
cash
what
flows.
are tomorrow's timing, sir?
See, let me decide and tell. Okay. So
Okay, so because I
uh,
need to go to college, sir. That's
fine. You just message me your college timings.
yes, sir.
Yeah. So we'll go for this. Then this is the, these are the 2 targets. Fine. Okay. Then see you at 9 p.m.
Okay, sir. Thank you, sir.
Yes.
Thank you. Thank you.
Thank you, sir.
Thank you.